Hey guys, it's Laura Hyatt with Team Callahan, and thanks for tuning in to another episode of Coffee Talk with Team Callahan. Our returning guest today is Michael Caputo from BankSouth Mortgage, and we are chatting all things refinance. So, numbers and money. Talk to us, Michael. So, how are you doing?
We can't complain. We got blue sky today, and we have low rates, which works out well for our conversation about the refinance process.
Yeah.
We love helping people. We help people love where they live, and that's easier with a lower rate. So you hear a lot about refinance now with historic all-time low rates for sure. For those that know that they plan to be in the home for a certain period of time, the refinance is a great way to save money, for sure.
So, talk to me, generally speaking, what is a refinance? Is it like a whole new mortgage? Is it just adjusting the one I currently have?
Good question. So when you buy the house, you have a first mortgage, right? And let's say that mortgage is at 5%, okay? So let's say the prevailing rate is 3%. These are hypothetical numbers, of course. So the net interest savings of 2% would translate to a monthly payment of, let's say, $400 less a month, okay? A lot of people would be interested in saving that much money.
Sure.
But we always encourage someone to look at the costs and then look at the monthly savings, and then basically we'll have a break even in months. So, which is the follow-up answer to your question. By paying off the first mortgage that you got when you purchased it with an entirely new loan at a lower rate, it's the recording, it's that new loan is where the closing costs are incurred. Kind of like when you bought it the first time, there are certain costs that don't have to be a part of a refinance, so it definitely is less than when you purchased it. But that's the key, is how much does it save us a month? How much does it cost us a month? And then what's the break even in months? So if someone is going to break even in 18 months and they plan to stay there for 10 years, they could save a lot of money. If someone plans to move in a year, it might not make sense. Something that we often see is if somebody might not necessarily love their home, they think a cheaper payment might help. So we try and ask a series of questions to make sure how long someone plans to be there, because after we do a refinance, if somebody calls us back 3 months later and says, hey, we found a new house, turns out they really didn't like where they were living, and a cheaper payment may not help them like it enough to want to stay. So we don't want to go through the cost of a refinance if it's not going to make financial sense. And that's the kind of exercise we go through to determine what that break even is in the number of months.
Gotcha. So essentially a good way to look at it is it's kind of like a new mortgage to replace the old one, where we're going to pay off the first one. And the whole point of a refinance, or a refi for the short lingo, is it's a way for you to save money, essentially, right? If you can find a lower interest rate and the numbers work based upon your personal situation.
Sure. And that's a good point. We always try to find as many reasons as we can to refinance. So let's say when you bought the house the first time, you put 5% down on a conventional loan, and there was mortgage insurance. And now the value of your home has gone up and the mortgage balance has gone down. So if you found yourself below 80% loan to value, you could drop the mortgage insurance by going through the refinance. Some people may want to contribute a lump sum principal so that they're going to refinance a lower amount. That would be an option. We're seeing a lot of people now actually go to a 15-year term off of a 30-year term. So that would be shortening the period of time at which you're going to repay, which is where you're going to save a lot of money as well. So, and then also some people take that as an opportunity to take some cash out because the value of the home has gone up and they want to do some home improvements. So the more reasons you can have to do a refinance, obviously the easier it is for it to make sense. And we try and find as many of those reasons as possible.
Gotcha. And so a great first step, if it's something that I'm considering as a homeowner, maybe I notice that the current mortgage rates are lower than what I paid, or I feel like I have some equity, or I need that cash. A good first conversation would be just to call my local lender, right? And say, this is what I'm thinking. And together walk through some numbers and see if now is the right time.
Yeah, and that's what we, it's sometimes you see folks who want to try and time the absolute lowest all-time rate ever. And that's great if you can do that. It's, for most people, it where am I and where could I go? And if that makes sense, we're seeing more people take advantage of that now, because the general thinking is there's probably a greater chance that they could go up at some point than go lower. But everybody has different thoughts on that, but we think it's an extremely friendly environment for both purchase and refinance.
Sure. And generally speaking, does the refinance process, does it take about the same timeline as like a new home loan like finance? How many days?
Yeah, it's about the same. We're pretty much going through the same process of what we did at the purchase, as a debt to income, calculation, looking at credit, and in certain situations, obviously getting a new appraisal done. So yeah, you're seeing that kind of a 30, 45 day process to get them done. Volume is definitely up. And so that's, it's a little bit different from a purchase in the sense that you're not trying to make a specific closing date. So it's a little bit easier, it takes a little bit of the stress off, but yeah, we're seeing, you still see some folks that come in with, 5+% rates, and they're happy to hear where their current rates are. And again, that shift to the shorter term, I would say, is probably more of the refinances I've seen in the last 30 days had folks going from 30 to 15 years, based on a lower balance, maybe dropping the mortgage insurance, and the lower rate. So the idea is, who wouldn't want to retire earlier and help pay off your home faster, reduces the total amount of interest paid, and possibly could get you mortgage free faster.
Right, because essentially you might be able to even work all of those numbers together into a way that your mortgage payment maybe doesn't change so much, the dollar amount you pay per month, but your term can be shortened because you've refinanced into a 15-year. And so, yeah, have that house early and what do they call it, retire?
And we honestly, we'd love to show the difference between like a 30, a 20-year or a 15-year. So if you can show somebody that the difference paid, the total amount of interest paid, it's a noticeable number. So for some, a 15-year payment is a commitment to, I like to say, pay yourself first. So the idea that you're allocating a certain amount of your monthly cash flow towards retiring a debt faster, that's a wealth building tool. And it's also fun to see the statement come in each month.
Making progress.
Progress. We like to see progress.
Yeah, absolutely. So anything else that someone should know about a refinance, or any other tips or strategies you might have for paying down that mortgage principal? I mean, obviously, the quicker we can pay down, the happier most people are. So how can we save some money?
And we love to save money, Laura, every day. So I would first, before we start talking, if somebody was looking at a 30 to a 30-year, that's an easy calculation. This is how much you'll save a month. This is what it costs to do it. Does that make sense? For some, the idea of switching from a 30 to a 15 could be attractive, but aggressively paying our mortgage down faster if we have a certain amount of consumer or revolving debt. So if I have somebody that has $25,000 on American Express at 26.9%, pay that off, work on paying that off first. So those are the situations where a cash out refinance to pay off higher rate debt could be an option. Not saying that we want to wipe out all the credit cards with the equity from the house, but sometimes it's a good exercise to go through there and say, hey, let's focus on paying down the most expensive debt first. And usually the mortgage is not the most expensive debt. So we kind of look at the, as a whole, the mortgage is a part of the debt. In a perfect world, we get it to be the only debt. And so I think talking about that from a financial planning aspect of, getting debt free and then getting mortgage free. There's certainly some debt that's less attractive. So talking through that process, when we talk about does a refinance make sense, we're going to look at all of that and say, hey, here's our short-term plan, here's our long-term plan. And sometimes the refinance can be a part of that. So as always, we want to make sure the credit scores are as high as they can be. Certainly rates are associated with scores. The higher the score, the lower the risk, the lower the rate. So sometimes, just like at the purchase, we'll look to see what can be done to make sure those scores are in the best shape they can be.
So it's kind of a comprehensive consultation, really, is that phone call to you or a local lender and just say, hey, this is what I'm thinking, but you're looking at the whole picture to make sure that it's going to be right for the individual.
Yeah, and sometimes, if the mortgage, sometimes that excess debt is acquired because the mortgage is a higher percentage of the income than you might want it to be. Now, there could be changes in household income, changes in household debt. So things happen, right? Life throws curveballs. So we think low rate environments like this are a great opportunity for kind of a mortgage/debt checkup, right? Just kind of take a look at it, say, hey, you're doing great. I wouldn't change anything. Or here are the top three things I would do tomorrow.
Right.
So yeah, I think advice from anybody is something that you could welcome to help pay less interest, save more money.
Yeah, absolutely. And so,
For sure.
any tips as far as paying off that mortgage quicker? I know we've always heard, if you can make one extra principal payment a year or put a little bit extra a month towards your principal, that's still tried and true.
Absolutely. It's small little things done consistently over time make a difference, right?
Yeah.
It's not the most fun thing to throw that extra $100 or $200 on there. But I like to think every dollar paid is $1 I'm going to get to zero faster. But I would take a look at what other debt there is, because the idea is we want to hit zero on a specific debt, and then the payment associated goes away. So if I had a vehicle financed with an $800 payment and a $10,000 balance at 8%, I would want to aggressively go after that, because then my monthly cash flow would improve that $800 a month, right? So we like to go after the debt that's at a higher rate, that has a higher monthly payment, and then start worrying about principal reduction faster. But when there's no other debt, then yes, sending in an extra 100, 200, some people send a lump sum at tax refund time, whatever is comfortable. But the idea is you think of it as investing in yourself and in that zero balance quicker. And that's not the goal for everyone, okay? Sometimes we'll hear or speak with folks that are a little bit older, and their goal is the lowest monthly payment possible. They'll let their kids worry about the mortgage. So they just want the lowest cost. So 30-year and just get it as a payment as low as possible, while others are trying to get to that zero balance faster. So everybody has a little bit of a different goal. And I think that's part of the consultation, is you say what's important to you and why, and then how could we structure things so you could get there with less stress and or faster.
Awesome. Well, that's pretty straightforward then. First call your local lender, preferably you, right?
That's the thing. We welcome the opportunity to help talk to folks and see if there's something we can do to make life a little bit easier.
Awesome. Well, cool. Anything else you'd like to share about paying off your mortgage or refinance before we sign off?
It's one of those things. Some people don't like to see it when the mortgage, payment arrives in the mail, but they'll like it a little bit more with a lower rate.
Yep. Absolutely. Cool.
All right.
Thanks for joining us. And guys, thanks for joining us for this episode of Coffee Talk. Reminder, every Thursday at 10 a.m. on Facebook, you can see the latest episode. So be sure to tune in next week. All right. Have a great day, guys.
Thank you.